It's long-term what?
Okay, let's get started. Today I'll talk about the thing. No, not the orange brick superhero who can lift 100 tons and build a kiddie slide.
How about a kiddie slide?
Great idea.
You like it?
It's beautiful.
Today I'll talk about a different thing that shows up uninvited and wrecks your insurance eligibility. Plus, 3 reasons to buy early and what to consider in your 30s, 40s, all the way up to your 70s. But beyond age, your finances also matter when buying insurance. If your net worth is under $200K, you might qualify for Medicaid. And if it's over $3 million, excluding your home, you might want to pay out of pocket. We cover those in other videos. But if your net worth is between $200K and $3 million, you should at least consider insurance. There are 3 big reasons why buying early can make all the difference. So let's jump in. Reason 1 to buy early is to avoid the thing. The thing is a health issue that pops up that could limit your options or disqualify you from coverage. When you apply, insurers turn into health detectives. They look in lots of places to deny you coverage or charge you more for it.
You get around, don't you, Fred?
Every place. Candy stores, restaurants, hotels, grocery stores.
What counts as the thing? It could be a diagnosis like cancer, Parkinson's, MS, or diabetes with complications, joint or back issues that led to steroid shots or physical therapy, memory trouble flagged during a doctor visit, your parent was diagnosed with early onset Alzheimer's, a recent surgery, or one that's being planned. These things are unpredictable and more common than you think, especially as you age. Here's why the thing matters. This chart shows how denial rates climb with age, starting at around 15%, but doubling, tripling, until nearly half of applicants in their 70s are declined. More things happen as you age. Okay, slight detour, but this image you've been seeing is supposed to be a birthday cake for the thing who has orange rock-like skin. So the cake looks like his skin, but my birthday cakes never look like my skin. That would be mildly horrifying. So anyway, not my best AI prompt, but let's move on. Avoiding the thing isn't the only reason to act early. Let's dive into reason number 2, getting coverage now. With home and auto insurance, you buy coverage 1 year at a time. But with long-term care insurance, you get coverage whenever you need it, whether it's now or decades from now. And it lasts for as long as your policy covers. It could be 6 years, starting the moment you first need care. By buying early, you're protected if you need long-term care early. And surprisingly, many people need it before they're 65. It's possible. A study showed that 37% of those receiving long-term care were under 65, often due to chronic conditions, injuries, or disabilities. Check out the link in the description for more on this study. Okay, so get coverage, but at what cost? Well, the third reason to buy early is to save money. You might assume that early coverage costs more since it offers coverage earlier. But the opposite is true. The younger you are, the less you pay. And here's why. Insurers expect you won't need coverage for a while, so they can earn interest on your money for longer. And you're also likely healthier now than later, which means lower rates for better health. And as a bonus tip, your costs typically go up on your birthday, which is not that great of a birthday surprise. Or you can wait to buy insurance. Not everybody does or can buy early. Here are some reasons why waiting might make sense for you. You may have higher priorities for your money at different points in your life, like saving for your kids' college or retirement or paying off your mortgage. It all makes sense. Or you might want to roll the dice by investing a bucket of money in the market and see how it grows. Is that a good idea? I don't know. But see a link in the description for our post on self-funding long-term care. And yes, you can buy coverage now and add more later. But just know, when you add more, you'll need to go through health checks again, and rates will be higher. Now let's talk about ages. Your age has a big impact on your insurance, how much it costs, and whether you qualify. In your 30s, only a few policies offer coverage. But if you've got the budget, this is when insurance costs the least. And yes, that's really me in my 30s. I looked well rested. In your 40s, most policies are still available, costs are reasonable, and you're likely in good health. But with work, mortgage payments, and college savings, it's easy to put this off. If you buy now, your future will say thanks, probably from a recliner. The average buyer is in their 50s. Your kids may be launching, your retirement savings are hopefully growing, and costs are a bit higher, but now still a great time to buy. In your 60s, health issues may start creeping in. Insurers ask tougher questions and often give memory tests. But if you can still qualify, it's worth locking it in. AI says I'll age gracefully. We're seeing 70s. Last call. Coverage is pricey and harder to get. Most insurers stop offering it at 75 or 80. If you're healthy, go for it. Don't throw away your shot. In the end, deciding when to buy long-term care insurance depends on your personal situation. Luckily, you've got a wide age window. Policies are available between 30 and 80. But remember, waiting too long risks getting blocked by the thing. No, not that thing, but that sneaky health issue that can block your coverage. And just like you wouldn't want to be surprised by a birthday cake that looks like his skin, you don't want to be surprised by a diagnosis that makes you ineligible. So if insurance is part of your plan, buy early, pay less, and then get coverage now. I'm Jesse, and this is long-term. What? If this helped, share it with someone who needs it. Like it so more people see it and subscribe for more unboring long-term care tips. And if you're thinking about long-term care insurance, we sell policies from all the top insurers. For personalized quotes or to learn more, visit longtermwhat.com. Thanks.